companies to fundraise. And then on the right, we have the 1exchange, which is a very unique private exchange. It's similar to, let's say, SGX or other stock exchanges, but the unique benefit of allowing companies to remain private while having liquidity. Both of them are licensed by the MAS, and both of them are fully digital, and both of them are actually supported by Singapore Exchange here in Singapore. So a very quick introduction to CapitalBridge. Essentially, we are an online platform. We focus more on mid to late stage pre-IPO deals. We allow investors to invest through our streamlined process. And we also reduce the ticket size so a greater amount of investors can invest. And this translates to high success rate for companies that are wanting to fundraise. On the other hand, we also have 1exchange, which I'll share more on the part of the presentation. But essentially, we see ourselves as the third board of Singapore. So for those of you who may not be aware, Singapore has two major public exchanges. We have the SGX main board. We have the SGX Catalyst, which is meant for growth. 1exchange is another board, which is we like to call it the third board, which also aims to be an exchange, but still allow companies to remain private. We are widely featured in the media, both regionally and also internationally. And we also have a very strong and reputable supporters. We have obviously SGX, SG Innovate. We have Hanwha, one of the leading one of the leading banks in Korea. Cyberport, one of the leading financial institutions in Hong Kong, as well as AMTD, one of the largest investment banks this part of the world. We also have strategic partners to help us with our investor outreach, including CIMB, Deloitte, Hana Financial Group, as well as Dun & Bradstreet. So moving on into the key meat of the presentation, I'd like to give an overview about the various fundraising options are there for companies. So for companies who are approaching this for the first time, I think the diagram on the left-hand side would be a useful diagram to sort of illustrate what are the various fundraising options and needs whenever a company progresses. So as we know, most companies have to be funded initially from the start, and most companies start from doing a private fundraise. They then move on into their first, second, and third round of financing, or in the industry, we call it Series A, Series B, Series C financing. In this stage, we still call it early stage financing. And when they grow big enough, they have a choice whether they want to raise more money from the private financing, or they can go for an IPO. So essentially, most fundraising can be categorized into two groups. You can do a private fundraise where the company remains private and you issue equity to new investors who are typically angels, small business lending, VC, PEs. Or you can do a public fundraise in which you have to undergo an IPO. And once you undergo IPO, your investor base will increase. You can then sell your equity shares to more investors, including the blue chip stocks and funds that focus on public listed equity, as well as secondary financing when you go on. Once you IPO, typically you can also allow retail investors to invest. The other benefit of a public fundraising is that you can also provide liquidity. So liquidity is the ability for your shares to be actively traded, being bought and sold, therefore benefiting your shareholders as well as incoming investors. So typically, this is the stage of the fundraising. Initially, you have angels, friends, families, moving on to early stage being a private company. At some point of time, most people then move on into public listing and do a public fundraise. It's also interesting to note that recently, most companies are staying private longer and longer. I think because of a few reasons. I think more investors are investing more in the private market, and also the public market is also getting more and more expensive to do an IPO. So in actual fact, the private market or the private fundraising industry has in fact overtaken that of a public fundraising industry. So what does this mean to you? So putting myself in the shoes of a business owner, whenever you are considering the fundraising options, I think there are 5 main options in which you want to consider whether you want to do a private fundraise, whether you want to do a public fundraise, whether you want to raise from PE, VC, so on and so forth. And I'd like to go through all this in detail. So basically, for the first is obviously investor access. So whenever you are talking about fundraising, whenever you are raising from private investors, this is most commonly a very restricted, a very small group of investors. These are typically your angels, people you may know, your VCP funds, and maybe very opportunistically strategics. So the investment pool or the investor base which you can reach out to as a private company is actually really small. It is also very complicated because it's a very regulated activities. There has been many cases where private companies try to fundraise, they violate certain advertising rules and restrictions, and then they either thrown into jail or they are fined quite significantly. So if you are a private company, fundraising can be very tricky. You can be trying to fundraise from a very limited group, especially if your company is not in the so-called hot space. So if your company isn't in the investment mandate of most PE or VC funds, it is very difficult to fundraise from the private market. That's also why when companies that are mature, they have a certain amount of revenue, they also want to do an IPO instead. They've done the judgment call that maybe getting money from public investors and increasing the amount of addressable investors that can invest in them can help with their valuation. And this will more than compensate for that of the significant effort and time and cost to conduct an IPO. The other consideration, which is a very key consideration, is liquidity. So that's number 2. Now, liquidity, as I mentioned before, is the ability for you to buy and sell shares. And this actually makes more and more sense, or is more and more necessary whenever a company goes on for a longer time. So in the early stage, if it's less than 5 years old, if it's a seed or a Series A company, typically there is no pressure. Everyone's very optimistic. Everyone will think that the company will IPO in the next 3 to 5 years. Most of the time, of course, it doesn't. And therefore, after the 5th year, typically most early investors or early shareholders, even the business owners themselves will be thinking to themselves, okay, how can I get a little bit of liquidity? How can I get a little bit of shares so I can pay for my own life events? So imagine if you are a business owner, you have built your company from 10 million to 50 million to 100 million valuation. Because it's a private company, it's a privately held company, it's very difficult to buy and sell your shares. It may not be easy to issue dividend back to yourself. And therefore, even though some companies may not need to fundraise, they also go for an IPO, so much so that they can offer liquidity to their shareholders. So if you're a company that needs liquidity, currently right now, an IPO is probably the only route for you. The third point is also equally important. There are many horror stories of companies raising funds and then issuing or being issued very onerous shareholding terms, so much so that they actually lose the company. So whenever you are raising funds, you are offering new shares to, for example, professional investors, they may input what I call very restrictive covenants. So in a layman term, you can't sell the shares before they do, or unless they have made a certain returns, or they may force you to take certain personal guarantees. So if the company don't do well, you have to sell your personal shares and assets, other assets, in order to bring the company back to the balance sheet. So of course, this is very onerous on the founders themselves. On the other hand, if you bite the bullet, you don't raise from these PVC investors, you do a public market and an IPO offering, there's a different set of challenges, because as a public company CEO, you are now required to provide a lot of compliance, onerous compliance and obligations. You're also required to provide continuous disclosure whenever you are making any material. So any material events to your company. So this may be overly restrictive, but as long as you have a good corporate governance and a good team, and you are very clear what to do, a public fundraising may allow you to have more and more investors on your cap table. The last two are very obvious. Obviously, it's cost and time. So in this regard, IPO, of course, takes quite a significant amount of cost, and as well as quite a long time. So an IPO in Singapore may be hours of 1 to 1.5 to 2 million. It may take anywhere from 12 to 18 to 24 months, especially during this COVID period. If you try to raise privately, you most of the time you need to find an advisor. And depending on how your company is positioned, and depending on how comfortable or how within the right investment mandate of the right private company shareholder, it may also take a similar amount of time and effort. And most of the time, for private financing, one other factor is uncertainty. So you may be paying a retainer, you may be paying success fee, but you may have no certainty on whether your fundraising can close or not. So in summary, these are the overall 5 considerations whenever companies are considering what kind of fundraising option to do. And this is more or less a quick summary of whether you want to raise privately from PVCs or your own network, or whether you want to raise publicly or to do an IPO. Obviously, for companies that are focusing more on increasing their liquidity and increasing their access, they will want to go for an IPO. However, they will spend more money to list and maintain their listing. It is more time consuming, and they do lose control and flexibility. On the other hand, if you are a company that is well positioned, you are well liked by the PVC industry, you may not need to go for IPO. You may still be able to raise from PE and VCs. You can still control your company. It can be cheaper and faster. However, it's very difficult for you to provide liquidity to your shareholders, which may be one of the key requirements. So at this stage, I would like to introduce one of the key options here. And this option was actually carefully created and designed because we actually saw that, whether you want the IPO or not is a very, very binary decision. There's no winners in this. So what we try to do is that we are trying to design a new option called private listing. And one of the key differences is that instead of having the entire company list and the entire company be publicly listed, where as a business owner you may lose control, we are doing a partial or hybrid listing where if you can see at the bottom right hand side, 70 to 90% of the company remains private and 10 to 30% of the company remains listed and floated. So what this means is that we are not doing 100% public listing. We're only listing a portion of the company, and that's where you have some liquidity and still have global access. But because the business is still retained privately with the same share structure as the 70 to 90% privately owned shares, the business can still operate as a private company, be owned privately, and do all they need to do as a private company. So this is more like a hybrid approach that addresses some of the drawbacks from doing an IPO, as well as some of the drawbacks that you do from a private listing, and really trying to combine the best of both worlds. And I'll go into this in more detail, but before that, I'd like to discuss our next topic. So shifting gears into our next topic very briefly. So having discussed what are the best methods to fundraise, is it a private fundraising, is it an IPO? The second question which comes to most of our minds is that where do we start fundraising? So taking a look at the audience in our webinar today, I think most of our audience are coming from the Southeast Asian market as well as the Asian market. So for this purpose, we are focused more on the regional or the Southeast Asian focus on the investors as well as the fund managers among the region. So as you can see from the image here, and this is taken from a very recent report in 2019. I think Singapore still leads by far the number of fund managers. So these are typically going to be your anchor investors or your lead investors that will anchor your deal and then pull all the rest of the investors in. So just by being in Singapore alone, you can already approach 60% of the P and VC fund managers that invest in private fundraising. And we also have 91 key large institutional investors here, which is probably more than the sum of the other countries in Southeast Asia. It also goes without saying that Singapore is a key financial center in the region, and we probably also have the highest AUM, or we call it asset under management. So if you combine all the funds, the fund sizes, this will represent around 19.2 billion, which is way over and above than that of the other industries or the other countries in Southeast Asia. The other factor is, of course, Singapore is actually a proxy to the region. So even though Singapore has a very small population of $6 million, actually the VCs and PE fund managers here in Singapore are actually very experienced and they are able to appreciate and invest regionally. So we have many PE and VC funds here who have a lot of experience investing in Indonesian e-commerce or Thailand blockchain companies. And this can allow them to translate and bring over the expertise to other investors who are also in the region or also from Singapore. This trend is likely to continue because Singapore has still the most favorable business policies and tax regime. So at the bottom line is that if you start a fundraising from Singapore, it allows you to already capture 60% of the market. And because all the funds are here, most of the headquarters are here, if your company is incorporated in Singapore, it also makes it very easy for investors to do due diligence on you. And this allows you to free up your time and focus on other issues whenever you are fundraising. So I think I won't elaborate more here. I think Eric will go through this more in detail. I'd like to move on to my next topic, which is the private listing option, which I discussed earlier. So as I mentioned earlier, we are trying to create under 1exchange a new option where the key difference is that it's a hybrid approach where companies are listing only a partial of the company to get liquidity, but majority of companies still remains privately held and in control by the business owners. And we actually see this from a very sequential point of view. So from a sequence point of view, we believe that companies should remain private. Initially, of course, at the early stage, they can raise capital for growth or expansion. But we believe that the transition from a private company to a public company is too high or too costly, or maybe business owners are too unwilling to do so. Therefore, what we propose is that instead of jumping straight from a public company to IPO, a private company can do a private listing on 1exchange first. They can list a portion of their shares, 10 to 30% as mentioned. They can practice how to be a listed company. They can make announcements. They can have their shares transacted. They can have some of their liquidity pressure eased. So business owners can actually sell a little bit of their shares. And once they're ready, they have their entire corporate governance set up and so on and so forth. They can then move on into listing on a public exchange, which can be SGX or NASDAQ or other exchanges. So we believe that this is a better way, it's a more phased approach. It allows the company to slowly ease into that of IPO without incurring significant risk or cost before they do an actual IPO. On top of the value that is done by that is for the companies, we also see a lot of value for investors. And over the last few years, we have seen more and more investors interested to invest in private equity. For two main reasons. One reason is because they want to diversify from their public shares allocation. And we know from history that private equity is a high performing asset class. It has outperformed private equity in the last 5, 15, 20 years. And the other reason is that we have also been receiving a lot of demand from investors to trade in private equity. And that's also why we believe that by forming 1exchange, we can allow companies a new fundraising and liquidity pathway, and we also allow investors the ability to an opportunity to invest and trade in these companies, therefore providing a win-win situation for everybody. We also offer an option called direct listing. So this is more for companies who are not fundraising. Maybe they do not need to raise funds, but they do want some liquidity and ability to buy and sell shares. And I'll go through this more in detail with a couple of case studies. So in the direct listing, instead of a fundraise, you are directly converting some of your shares for listing. And this may help and is more suitable for companies who do not need to fundraise now, but do want to have some shares traded. Obviously, the pros of a direct listing is that the fees are shorter. You don't have to waste time and effort preparing a fundraising campaign, as well as having lower fees and lower effort required. So I think this private listing is best illustrated by having case studies. So I'd like to go through two case studies. The first case study is that of a direct listing, which I mentioned. When there's no fundraising, the company is taking a portion of their shares and converting it directly into a listing on 1exchange. So this is a Malaysian-based company. It did not have to reincorporate. Within a span of 2 to 3 months, direct listing was done, where 28% of the shares is directly listed on 1exchange where trading is already happening. And the company still owns majority, which is 72% of the shares. So this is a hybrid approach, and it allows maximum flexibility for the company. And the interesting thing is that because our exchange is fully digital, all these shareholders, 70+ shareholders, were actually onboarded digitally. And in fact, our listing ceremony was very interesting. We also did it digitally, I think only 1 month ago on the 22nd of July. So if you want, you can check out the listing ceremony here. And of course, the company benefited from having trading and ordering done at a cost which is very low and not as compared to an IPO. So basically, for this Danai Spa or Cryogenic Resources, they are able to do a direct listing in a very quick, cost-effective, and streamlined manner. And as of now, there are active orders being created on 1exchange, and the founders and shareholders are able to liquefy some of their shares even before the IPO or even before having going through the cost and effort to do an actual IPO. The other study which I can share is the aggregate asset management. So this one is a case study where it took a little bit longer because there is a fundraise involved. So in this case, the company actually needed to fundraise to the tune of $5.6 million before they then consolidated the fundraising along with existing shares. So in this case, the company fundraised first before listing on 1exchange. And after they listed on 1exchange, they actually saw a significant amount of trading. So they were 300K traded within the first 3 months of listing. So similar to Cryogenic Resources, there was a listing ceremony done on SGX. And hopefully after COVID ends, we will start having listing ceremonies at SGX again. But for aggregate asset management, for a fee that's lower than a fee, time and effort that's lower than that of an IPO, they managed to do a listing on 1exchange, saving cost and money, as well as allowing their shareholders to buy and sell their shares, similar to as if they were a listed company. So I think I'm off to my last couple of sections. I'll just quickly go through the process timeline. So the process on how it works is that it's very similar to that of an IPO. We do need to have a preparation process where we, together with other professional service providers, will determine whether you are suitable for a listing, whether you meet our criteria, whether there's additional help needed, for example, to create the offer documentation, or to establish independent valuation, or to create certain presentation decks and materials and projections. And so this can be done not by us because we're an exchange, but with other professional services providers, which can include advisory firms, secretarial firms, and even InCorp. If there's a need to fundraise, there'll be a placement phase where we will make offers through the platform, in this case, CapBridge, to investors on a regulated manner. So everything is ticked off by and compliant with MAS definition, and we don't violate any advertising rules. It is also then that we establish the final price. And once the placement is done, the rest of the process is pretty straightforward. We will then create the SPV, which will then hold the shares that are to be traded and listed on 1exchange. So the benefit to the company is that once the SPV is created, any ongoing shares traded is on the SPV level, and the company only sees one entry to its cap table. And once that is done, the SPV is created, and that's mainly it. Your company SPV is now listed on 1exchange, and you simply have to comply with the listing rules as well as provide annual audit statements. So our listing rules is more like touch. I would say that it's more it's easier to comply to as a private company. It's designed for private companies as compared to more onerous listing rules on public exchanges. So with that, I'd like to go to the end of my talk. As a quick overview on the criteria, we are looking for companies that have at least 2 million in revenue, or they have raised over 4 million share capital. So this is all criteria. We do need them to have at least 2 years operating history, as well as a working capital of more than 12 months. So we do have other criteria, but this is more like a summary of the criteria. And of course, we also allow investors to start trading and investing on 1exchange through our digital platform. And the other unique point is that investors do not need to go through a broker. They can actually directly invest and trade. So with that, I end my talk, and I'll now hand over to Eric, who will share more about why Singapore and other matters. Eric, please.
Thank you, Haiping. Thanks for the presentation. So in a way, I think Haiping has shared a lot of in terms of the advantages and benefits of doing private listing. versus a public listing or the eventual lead up to a public listing. And in my presentation today, what I'm going to focus on is essentially if you're looking at doing fundraising, be it private public listing or through the traditional banking route or through the traditional PEVC route, I would like to share, or the presentation will aim to share why Singapore, right? So this is the main part of my presentation today. So a little bit about myself. I'm an ex-corporate banker for more than 11 years, mainly dealing with large corporates, SMEs of the world. In my current role with InCorp, my expertise is in terms of providing structuring, advisory, market access in key parts of Asia, helping you incorporate the entity itself, as well as various business advisories in terms of fundraising, investors management, legal and finance matters. So a very quick 2 slides group snapshot of InCorp Group of companies. So InCorp Group is a Singapore headquartered corporate solutions provider where we specialize in various forms of corporate services such as corporate compliance, accounting, taxation, incorporation, immigration, and all sorts of business advisory. We are pan-Asia player. We are present in a few countries in Asia, which is on this page itself. We are present in 6 countries, including Singapore. We have about 450 employees in all the 6 countries where we are in. And on the right-hand side, where you can see this is our full range of services where InCorp Group companies in the region will be able to provide to you if you decide to work with us. And one special mention is we do have a share registry arm where we also provide share registry services to listed companies in Singapore. So I think without further ado, let's start on my part of the presentation. Whenever I want to talk about why Singapore, right, I always like to start in terms of the key metrics that Singapore can give for potential companies or entrepreneurs that is looking at Singapore. So in terms of, according to World Bank, right, in terms of the time required to start a business, or in a professional point of view, it typically takes about 2 to 3 days. Incorporate a company. Of course, we have also done incorporations whereby a single day is sufficient. According to World Bank, right, our overall ranking as a place of doing business, we rank 2nd in the world, which is a high accolade among all the 100 over countries globally in the world. In terms of ease of starting a business, right, we rank number 4 in the world. In terms of time required to enforce a contract, which is important to all businesses nowadays, especially when it comes to when you have to exercise your legal rights to go and place a demand, a letter of demand, or a litigation suit against your customers or suppliers. According to World Bank, it takes an average of 164 days to enforce a legal contract, which is actually very fast in the context of the world in that sense. In terms of the time required to prepare and pay taxes, again, according to World Bank, it takes an average of 64 hours a year for you to file taxes. And in comparison with all the key Southeast Asian markets, for example, like Philippines or Vietnam, it averagely takes you about 300 to 400 hours a year for you to prepare and pay taxes at the corporate level. In terms of corporate tax regime, we adopt a flat corporate tax rate at 17% on net income. I will share this later on in the slide. I will delve deeper into this. And there is actually no foreign ownership restrictions in Singapore. So what are Singapore's key benefits or our strengths, right, for businesses like entrepreneurs like all of you here today? So I think I can basically summarize it in all this small little icons that you can see on this page. I think all of you have seen or have heard a lot about Singapore having or being the gateway or launchpad into Asia. You have heard a lot of Singapore having a very strategic geographic location in the world, which is true, right? Singapore is only a few hours to all the key Southeast Asian or Asian markets. So it makes it very beneficial for you to form or start up headquarter or operations here in Singapore to service the rest of the region out of Singapore. In terms of the government and regulations itself, we have a very strong and supportive government. I would say very politically stable. Again, for business owners like in today's, I would say, chaotic world, as I can say, a very strong and supportive government will be key for all businesses, because it also ensures that there's very transparent and clear regulations in terms of how you want to do business and how you can do business. So again, for businesses that wish to conduct international businesses, I think Singapore is a very right place to do so. I've shared a lot of ease of doing business according to World Bank, and yes, it is very easy to do business because again of our clear and transparent regulations. Singapore as a city-state, we have very advanced tech internet infrastructure. So for businesses who are looking to set up significant presence or operations here, you are well assured that the land, internet, and tech infrastructure has all been properly set up for you to run a business from day one once you set up. And I think earlier on, in terms of access and preservation of capital, Haiping has shared a lot on, yes, there is an ease of access to various types of investors, which later on I will delve or dive deeper into. Because of the clear and transparent regulations that Singapore have, right? We have very strong legal and IP framework. Again, when it comes to IP, this is something that business owners today will be very interested in as well, because for any product and services or branding that the company has developed over the number of years, you want to ensure that when you do business or as a Singapore company, you are able to exercise your IP, or at least ensure that IP protection is at the fullest. Yeah. So later on, I also have a slide where I can show a bit more details around this. And yes, Singapore, although we are not a 0% tax jurisdiction, I think we run a very competitive personal and corporate tax regime in Singapore, which makes us a very attractive place in terms of corporate tax for you to do business here. And for a lot of high net worth individuals, right? Singapore is also well known to be a very big or large personal wealth management hub, where a lot of high net worth individuals have a lot of free access to private bankers of local and international banks that set roots here in Singapore, as well as setting up family offices in Singapore through their own vehicles to ensure that they can continue to generate wealth out of a family office. In terms of IP protection, right, I think according to various international surveys, right, which consistently rank Singapore's IP regime as one of the best in the world. And if you look at the table here, you can see that according to the various international surveys that was done, Singapore ranked very high overall in the world. And according to US Chamber, we rank actually number 8 in this level. In terms of Singapore's strengths, I think Haiping again has shared a lot on this, but yes, Singapore has an established ecosystem of finance or financial institutional players. As a Singapore company, you will have access to more than 10,000 over finance professionals across banks, funds, asset management firms, or family offices that have already set root in Singapore. And while you can get a lot of access to VCs and PE funds, right, angel investors and family offices, a lot of them again has set root in Singapore. You will be able to get access to the decision makers if you're looking at private fundraising. And of course, we can never forget the traditional banking route, of which if you are seeking for bank loans, right, to finance your working capital of a business. Yes, a lot of key international and local banks are significant presence in Singapore for you to get access to working capital or long-term financing. And nowadays, I say it's a trend as well. There's a lot of alternative lenders or P2P platforms that have been approved by MAS or the Central Bank of Singapore to start up in Singapore. So of which, if there's a gap in the market whereby the companies or smaller startups or SMEs who cannot get access to bank loans or private wealth or private equities, they can actually get access to these alternative lenders who are very reputable and also licensed by the central bank. So why do you want to do fundraise in Singapore? Right, I think there's a couple of advantages if you look at this slide in terms of advantages to the shareholders, which essentially will be the founders, investors, or even employees on ESOPs that got granted stock options by the company. And there are also advantages that is to the company itself as it's operating its business here in Singapore. So if you start off with the shareholders portion, right, I think mainly I can again divide it into two ways in terms of what are the benefits or why you want to do fundraise under the Singapore structure. Obviously, there is a tax advantage. There is 0% dividends tax in Singapore when dividends are declared to shareholders from the Singapore company. And there's also 0% capital gains tax in Singapore when the Singapore company gets sold off, right, by the shareholders. So again, it makes it a very stable platform for founders and investors alike, and typically, or in particular for investors of the world, where they prefer to invest into a Singapore structure because again, dividends and capital gains tax is taxed at 0%. So they actually essentially maximize their returns whenever dividends are declared or the companies or their stakes get sold off. There are, of course, legal advantages as well, where we have a very strong legal framework with a corrupt-free government, which essentially means that for a holding company structure where shareholders' agreement are being drafted under Singapore law for the Singapore company between, again, founders and shareholders and investors, you are assured that you are actually governed by a very strong legal framework here. And of course, for large institutional investors who may be looking at your company for potential investment, again, as a counterparty or as a counter risk party, as a Singapore perspective, right? We have a AAA S&P rating. So for large institutional investors, this might be one of the criteria when they invest into any holding structure. In terms of, there are also various Singapore or business advantages to the company itself, right? So as a company, if you have significant presence or operations here, you have obviously the Singapore branding. You can leverage on Singapore's DTAs, and Singapore has a bragging rights in terms of we have one of the most number of amount of DTAs that we have signed globally. So as of today, we have about 60 signed globally, as well as 7 limited. In terms of government co-investment schemes, right, there are a few government co-investment schemes, especially to tech and deep tech companies here. And of course, the Singapore have two very active sovereign wealth funds that actively take stakes in a lot of businesses around the world, such as GIC and Temasek. These are the sovereign wealth funds of Singapore, right? They actually take a very active stake in investing into companies as well. And of course, if you there are also certain tax deduction or exemption schemes available for all Singapore companies. And for the larger corporates of the world who are looking to set up headquarter functions, R&D centers, or treasury centers in Singapore, the government will be interested to look at giving very customized tax incentive schemes to attract these large foreign investments into Singapore. So in terms of banking regulations, right, I think the central bank or the very flexible central bank regulations in Singapore also attracts a lot of small and big businesses to want to do business out of Singapore. Again, in terms of Singapore, we have I would say, low borrowing costs versus other jurisdictions, especially against Asian jurisdictions. We essentially or typically have a lower borrowing cost. The central bank regulations also allow easy or flexible foreign exchange of non-restricted major currencies of the world. You are able to have accounts of all the major currencies that you can trade with in Singapore, and you can freely do or conduct FX. And again, if we compare to other Asian countries, right, essentially many countries do not give you access or free access of doing easy FX. And there is no central bank regulation of mandatory use of their local currencies if you want to do business in the country. And for the smaller companies or SMEs, there is actually a government guarantee for your bank deposits that you put in Singapore-based banks of up to 75,000 in case there's a bank failure. So I've spoken a lot about the benefits of Singapore itself as a country, right? So I think it'll be interesting also to know how do you assess Singapore? What are the types of legal entities that you can set up in Singapore if you decide Singapore is the right place to come to? So over here in the table, you can see essentially there are 5 main ways or legal entity structure where you can look to form in Singapore if you want to do certain business here. Of course, if you look at the highlighted portion as a private limited company or limited by shares company, will be essentially the most common form of legal structure that companies adopt if they want to expand into Singapore, especially in terms of the entity type itself will be able to enjoy all the tax exemption and incentives made available by the government. And because the company structure is limited by shares, right, you are able to raise new funding or equity from potential investors, or you want to, like Haiping has shared, you want to conduct private or direct listing, you are able to do so only under a private limited structure. And also the company is available to allow you to allot new shares for investors to come in. So on this next 2 pages, I will share a few common structures that companies adopt when they want to set up in Singapore. So if you look at option 1, this is a very typical subsidiary structuring, of which the existing company, a foreign company, for example, wants to set up a Singapore subsidiary, a 100% owned Singapore subsidiary. So this is, I would say, the most common form when a foreign company wants to set up in Singapore under a subsidiary structure. For option 2, I would say a lot of large MNC or Fortune 500, 1,000 companies who want to adopt, where they are interested to set up a regional headquarters or even an international headquarters in Singapore, of which the existing home company, it can be listed elsewhere or it can be based elsewhere in the world. So they set up an Asia HQ structure under this Singapore subsidiary, and then for all their other APAC subsidiaries, right, they would actually set up under the Singapore subsidiary. Again, the advantages, you can leverage on the large amount of DTAs that you can do in Singapore. And if Singapore entity becomes the Asia invoicing hub or supplier or procurement hub, the DTAs will be important for trading companies or invoicing companies to conduct in Singapore. And again, if the company is large enough, it's also possible to obtain certain customized tax incentive schemes that the government is happy to give. The third option will be for existing foreign companies, for example, they want to set up a separate structure, structure without any links to the existing home company in the world. So again, the same set of shareholders or different set of shareholders will be able to set up a separately owned Singapore company to conduct different activities or a new business, or to be a trading hub that has no links or corporate links to the existing company. So there are companies out there in the world that have or prefer this structure because of various commercial decisions or considerations. In option 4 is kind of interesting in a way, of which I would say a very classic example would be a tech company that is operating elsewhere out in the world, and because their investors decide to invest into a Singapore holding structure, they essentially incorporate a new holding company, a Singapore holding company, to counter-own or in turns own the existing operating entity in Singapore and all other subsidiaries in the world if the group has it. So this is, I would say, a more major shift, and the purpose must be very clear on why such a structure will need to be structured. Again, if in the fundraising perspective, if the investors prefer to invest in the Singapore holding company structure because of taxation considerations, or future divestment considerations, or even because in preparation to eventual private or public listing, this is a common way to structure a new Singapore holdco. For option 5, I think this is something that may not apply to all companies of the world, but in Singapore, there is a regime which is what we call a redomiciliation. So essentially what this redomiciliation occur or can happen is that the existing company for example, existing company sitting elsewhere in the world, instead of being say a BVI company, for example, it instead redomiciled into a Singapore company. So under a redomiciliation, actually there is no new entity that's being created. Think of it as merely a shift of the home country for the same company. So once a redomiciliation is completed, there is essentially no new entity that's being formed in Singapore, but it's a shift of the home country or jurisdiction into Singapore. So again, this redomiciliation will suit the larger companies of the world because there is a size and solvency criteria that the Singapore government looks at. But again, for companies that have been operating in foreign shores and decide that they want to become a Singapore company and don't want to go through the trouble of doing a whole corporate restructuring, they prefer maybe to explore using the redomiciliation method. So I think for all business owners out here today, you will also want to understand a little bit more about the Singapore corporate tax regime. So if you look at the left-hand side first, right, Singapore adopts a flat corporate tax rate of 17% on net income. And take notice pre-tax rebates and tax exemptions that the government may give or will give to all companies of the world. And I shared earlier on that there's actually 0% dividends and capital gains tax. So in Singapore, there are certain, I think immediately, as a Singapore company, you will be able to enjoy these two main tax exemption schemes. So for the younger startups or younger SMEs, if they set up in Singapore and of which the shareholding structure is largely owned by individuals, right? Immediately from first 3 years from a DOI or date of incorporation, you will be able to enjoy this thing called a startup tax exemption scheme, of which for the first 3 years, your first 200,000 in Sing dollars of your net income, you will enjoy 75 and 50% of tax exemptions. So for all other companies, say for a subsidiary structure, right, of which you have 100% foreign-owned parent company, instead of the startup tax exemption, you will actually enjoy this partial tax exemption scheme, of which again your first 200,000 is also subjected to certain tax exemptions of your net profit or net income. So in a way, for the smaller companies or the younger startups, this thing will be very useful in terms of tax savings. And also, and in the drive by the Singapore government to want to encourage companies to want to conduct R&D works in Singapore, or also to register your IPs in Singapore. There are tax deduction schemes in Singapore to ensure that companies or businesses that does this R&D and IP registration in Singapore to have certain tax savings or tax deductions as well. So for example, for R&D works, for every $1 that you spend on tax deduction, you actually have a 250% of tax deduction if you conduct R&D works here in Singapore. And on IP, right, for qualifying licensing costs that the company incur in Singapore, for every dollar that you spend, you can actually claim up to $2 back in terms of tax deduction. So in terms of the Singapore company formation, I will go quickly on this. All right, there's essentially 5 main criteria to form a Singapore company. Minimally, you need 1 shareholder, of which 100% foreign ownership or foreign shareholding is allowed. The shareholders can be an individual or corporate entity or a combination of both. You will need a local resident director, of which this person must be a Singapore citizen or Singapore PR, or a foreigner who works under the same company in Singapore. You will need a local registered address. And in terms of share capital, minimum to form a company, you just need $1 as a paid up capital to form a company, which makes it very easy for you to quickly form an entity first, and then subsequently increase your pay up capital where required later on. And of course, for every Singapore company, you will need a local resident company secretary, of which again, you can outsource to companies like InCorp itself for you to form the company. In terms of regulatory compliances for the Singapore company is actually pretty straightforward. You only need to do compliances to 2 government authorities. 1, to the Inland Revenue, which is actually our tax authority in Singapore. Every year, you need to file for your corporate tax. And to our company registrar, which is ACRA, as we call for short, right? On a yearly basis, you actually need to hold 1 AGM or annual general meeting 6 months after your financial year end. And then 1 month later on, which is 7 months after financial year end, you need to file your annual returns. And to help the smaller companies or the younger companies, there is actually an audit exemption, of which if you meet certain criteria, the financials do not need to be audited. So again, this helps a lot of younger or startup companies, of which they can save a lot of costs to avoid getting their financials to be audited. So I come to the end of my presentation. Here's my contact details as well as our group website. Feel free to write into me if you have any questions when it comes to setting up in Singapore or in the markets where we are present in. Thank you very much.
Thank you, Larry. Thank you for the informative session. Thank you for all those who have submitted your questions over the Q&A. We have very good questions. So perhaps I'll pose some of the questions to Haiping first on the fundraising. On the fundraising side, one of the interesting questions I've seen is on private fund is the private fundraising or private listing a suitable mechanism for internal divestment to employees of a company?
Okay, thanks YS and thanks the audience for that question. So I think whenever you are talking about employee benefits, right? I think what we have seen from IPO is that companies have always been using ESOPs or employee share option schemes as a means for talent retention. So we have seen in the US especially that whenever companies are going towards an IPO, they actually issue what we call ESOPs to employees. And this is the incentive for employees to actually stay on and fight together with the company. And there's what we call certain vesting period, which could be 1, 3, or 5-year vesting that that ensures that the company remains, the employee remains with the company during the vesting period. So in terms of the first method, which is the private financing, if you do a private financing, it's highly unlikely that you will able to benefit or retain your employees. However, if you do a private listing, this is one of the core benefits in a situation where you can actually issue ESOPs or ordinary shares to your employees, and then you can do a direct listing on 1exchange, and part of the direct listing float can be some employee shares. So instantly, or rather after 1 or 2 months, you can actually allow your employees to be given shares in a company, and instead of them having to wait, maybe 3 or 5 years for an IPO, you can actually sell some of these shares to on 1exchange, and this allows them greater incentive for them to carry on. So, for example, if employee has you issue them 100 shares, maybe 5 shares can be the float, and then they can start playing and selling the 5 shares on 1exchange.
Thank you, Haiping. On the other question, I understand that 1exchange is headquartered in Singapore. Are there any restriction in terms of a foreign-owned company to list on 1exchange? What's the process to it?
So because our process is already the creation of an SPV, so the company, strictly speaking, can actually be domiciled essentially anywhere in the world. What we are essentially doing is that we are creating a SPV, which is a Singapore domiciled trust. We are purchasing the underlying equity, which can be ordinary share or bonds or preference share in the company. And then we are listing the SPV and the securities for trading. So strictly speaking, we do not require the company to re-domicile. But of course, as we mentioned in today's presentation, Singapore is a very good place to re-domicile your entity to. There are many benefits, and it will greatly actually help in the fundraising process, as well as the corporate governance, tax, and so on and so forth. So even though one may not need to re-domicile, actually we do encourage it, and as part of the process, companies that are looking to fundraise can also consider it.
Thank you. Perhaps one final question for Haiping. Haiping, for the interest of investors, right? Can you elaborate on the regulation on that have in place for 1exchange in terms of the due diligence for the companies listed on 1exchange?
Sure. So we have a similar approach to on a public listing. So in a public listing, you have the sponsor that is doing the various hygiene checks. For us, we do not want to impose the same level of cost. So we do engage other third-party professional services firm. Some of them includes a valuation firm. So the valuation firm will provide an independent third-party valuation report. They will then set the reference price. So we don't want the company to be being priced too high or priced too low. And there's a third-party reference that will then set the price for both investors and companies. So there's a fair pricing. On our side, obviously, we will do various hygiene checks. And obviously, we also work with other entities like CapBridge or other placement agents who will then do their own checks whenever we are doing a fundraising. However, because we are not offering to retail investors, there's no need for a prospectus, as well as all the investors coming in are actually waiving their protection by declaring themselves as an accredited investor. So because we are trying to keep the costs lean, we do not require a prospectus, but there are still safeguards for investors along with the listing rules which the company have to comply to.
Thank you, Haiping. Now let's switch gear to the incorporation. Perhaps Eric, you can take this. So first question, what are some of the benefits for a company incorporated in Singapore? and having subsidiaries in other countries?
Sure. I think this is a good question. So there are certain government grant schemes for Singapore companies, of which at least if there's a 30% local Singaporean shareholdings in the company will be able to apply for this grant called the Market Readiness Awareness Grant, or MRA for short, of which up to 100,000 of expenses that's incurred to form subsidiaries overseas or do business development overseas. They will be able to obtain up to 75% of grants for such purposes. So I think this makes it very attractive for Singapore companies when they want to expand out to the region or to the world and take advantage of these grants to part finance their expenses.
Thank you. The second question will be, what are some of the key documents for a corporation to prepare when it comes to incorporation?
Essentially, because again, in my earlier slide, the ease of starting a business is pretty simple or fast in Singapore. So in fact, a lot of the legal documents when it comes to incorporating entity in Singapore is actually largely done by firms like InCorp itself. So actually we'll handle all the documents, and once executed, we can form the company for the client.
Okay, and in terms of the time frame for incorporation, the turnaround time when engaging a vendor like yours or going directly by incorporation on their own?
Okay, so for foreigners, they can't go and, or foreign companies, they can't directly approach the government to form the company. So they will need to use advisory firms like us. So we have done incorporations as fast as 1 day if the structure is relatively simple. But for most other companies, I would say, given the time to execute, prepare the documents, probably 2 to 5 days will be, I would say, an average time frame, I would say. But of course, for very complex structures where there's multi-layers in the company, maybe 2 weeks. Yeah.
Thank you. Unfortunately, I think our time is up. We have come to today's the end of our session. Thank you again for both speakers, and thank you everyone for joining us today. Our speaker would love to connect with you via LinkedIn or email address. The webinar deck will be sent across to you guys shortly. The contact details will be shared also. Feel free to contact us for any further inquiries. And if you like our webinar so far, do follow us on 1exchange and InCorp on our social media channel. Let us know which other topic you would love to hear us speak on. Have a good day, everyone. Thank you.
Thank you. Bye.
Thank you. Bye-bye.